If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. This is what I was worried about, a key level that was standing in the way from these huge gains from being made. In fact, that if we could then flip this area into support, and we do actually get up to those levels, as long as this is all being maintained, then eventually we could even see some more explosive targets topping out at almost the $3 area. And knowing that our previous all-time high is around the $3.30 mark, we can see that very quickly, if we keep these levels all maintained, that we could be seeing these targets over the next months. But what we're seeing right now after this rejection, which is something that I was worried about in the last update, was that this is a key level that, if being maintained, could actually send us to new lows, as this would be considered a lower high, lower than this high. This is our most recent low, so be looking for a lower low over in this area. And so all we now really realistically need to do after rejecting this point, and to invalidate any further downside below this low, all we realistically now need to do is, because we formed this daily bullish cross on the daily time frame, it signals that XRP is in a daily bull market. And that's why we've seen over these past weeks some explosive moves in the range of about 41% move on one of the top coins in the whole industry. Now that we're reaching this key level of resistance, it's not really a surprise that we're rejecting it, as it's a golden pocket Fibonacci level. This is a massive impulse, and we need to understand here, once a move is completed, so equally that once this one was completed, there's a level we need to come back down to. We're trying to retrace back down to this low, but there's key areas that could hold us up. And equally with this massive impulse down, we're trying to retrace to this high, but there's things in the way from actually getting up to this high, because once we get up to this high, all we need to do then after that is break above it, and you're looking to actually target all of these over here. But a key level needs to be maintained. If we're getting up into that price point, we're above this level. This is the level that could send us potentially to lower prices. So it's all about getting above this level. This is what's standing in the way from the retracement back up to this high, when we're just looking to break that 94 cent area, and then obviously look at these as future targets. So realistically, we just need to hold this low, but I'm going to give you in this update today some very key levels that need to be maintained, more important than this one in the short term. So make sure you stay tuned. Don't forget to like, subscribe, comment and share, and yeah, let's get on with it. So if this is our top at the moment, what we need to do is measure our pump, so the bottom over here of the dump to the top of the pump, and it's giving us some key levels that we need to maintain. We could already understand what levels need to be held, but using the fibs is just going to give us further confirmation. So get rid of the fibs very quickly. We can see that we formed this bullish cross, so all we need to do is maintain that, the most recent moving average being the 20. So if we want to continue with this uptrend, if this is a really aggressive uptrend, then we might just find support over here and then look to break this flipping support and retrace back to the high, waiting for a break of that level to actually continue higher. Again, if we lose the 20, if this is not a really aggressive uptrend, then we could come down and lose the 20, and this will act as like a second layer of defense and would eventually do that same path anyway. So if we're going to hold these key levels, we're eventually going to see a break of these highs. That's my perception at the moment. That's my thinking at the moment. And so if we then go ahead and lose both of these moving averages, then you've got one final trend decider, your daily 200 EMA, suggesting what the long-term outlook should be. As we are above it, we should be continuing up. We had a little fake out over here where we eventually reclaimed it, formed a bullish cross, created this higher low and saw new highs. So we know that holding above this level should actually send us to new highs eventually. So that's why maintaining this key area of support, so we could afford to come down to that area, but as long as we create the reversal wave again, or just create the reverse wave by actually breaking through this high and confirming its support, we could come down to the 0.5 at that point, and then we would look to retrace back to the high, and on the break of that, look for new highs. And essentially that's what we're actually being shown in the past over here, where we've reclaimed it. So we've put in a new high above this one over here, above the 200 EMA, confirmed it as support. So we had a little fake out over here, but eventually formed a bullish cross, confirmed that support, and actually came down to the 200 EMA to actually confirm its support. So could we be coming back there right now, because we haven't actually confirmed it since the breakout? So that would be considered the bottom of our newly formed uptrend. What was it in the end? It was our bottom, and then we broke out of this high. So essentially, if we can now go ahead and maintain this level and create the reversal wave and flip into support, we will be seeing higher than this high. The risk is now that we don't hold these supports and it's all being flipped into resistance, then we go ahead and retrace back down to this low, looking for new lows, and then we could use those fibs that I once placed on the chart over here for targets to the downside down at 30 to 37 cent. At the moment, I don't believe this is happening. Why? We formed a bullish cross on the daily. We're above the 200 EMA. We're just at a key level of resistance that could send us lower, but realistically, we just need to find support on one of these three moving averages. The fibs do suggest either the 200 EMA at the 618 or the 0.5 where the 55 is. But if this is a really aggressive uptrend, you can just find support on the 20 where the 382 is, confirm that as support and have a break of this golden pocket to flip it into support. Can come as low as the 0.5 and then eventually retracing back to this high, waiting for a break of that to as a final 100%, well, can't say 100%, but final confirmation that we will actually go up to these targets. These targets become valid when the reversal wave is created, so when we confirm its support here, but this is what could stand in the way. So it could be that you trade to there and then look for another trade for to the higher up targets, or as a holder, you just do nothing and you wait for it all. And that's what I'm pretty much just doing over here. We're just waiting for these moves. So can it now hold? Let me know your thoughts in the comment section below. And if it does, of course, maintain the 200 EMA, which sits at the price of 52.8 cents, then we are looking for an eventual break of 71 or 72 cents, and then a break of 94 cents to go to targets between $1.15 and $2.88. So pretty much $3. That is it from me today. Like, subscribe, comment, share if you want to get educated so you can learn how to do this all by yourself. I have multiple things in place, just like an ebook, the cheapest option, or the Discord community where you get weekly group mentorship calls. That's another great option. If you want a course, I have that as well. If you want one-to-one mentorship where I teach you live, just me and you, where you also have 3 months free in the chat to get those group live calls, then use the links in the description down below, and there will be a bit more information right at the end of this video. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.